Did you get this in the mail recently? With Colorado property taxes on the rise, what can you do? Well, today I'm going to discuss 5 steps you can take when it comes to your property tax valuation. Let's get started. Step 1, get your notice of valuation. Everyone should have received their property notice of valuation in the mail by now. There might be a slight variation from county to county, but most will look like this. By the way, if you shoved it under some paperwork, now's a good time to get it out. For this example, I'm using property in Douglas County. If you're watching this and you're in a different county, some of these numbers and figures will differ slightly. What does this new actual value of my home mean to me? Well, it means property taxes are most likely to be impacted, but the bigger question is by how much? Because that is something that this card doesn't tell you. So let's walk through how to calculate your tax changes in a way that will allow you to figure out if you need to appeal the valuation the county assessor came up with. Step 2, determine if the actual value is appropriate. Now, we can all agree that home values have gone up over the last 2 years quite substantially. And due to this reassessment, which by the way happens every odd year, and looks at the previous 2 years. In this case, those dates would be July 1st of 2020 through June 30th of 2022 was really the peak of our hot housing market. So the value of your home is going to be based upon homes that sold, refinanced, or were built in close proximity to yours during that time. And they have to be very much like yours in style and age. Because obviously these properties are near you. That means that the assessor is going to look at 2-story homes like yours if you're in a 2-story home, ranch-style homes like yours if you're in a ranch-style home. You're not going to look at your home and then go across town, pick a larger home to compare yours to. Basically, after looking at some of these numbers, that's what it feels like they did. Because these homes are based on homes sold, refinanced in your neighborhood, not based on fully executed home appraisal of your house, value may have gone up simply because you're in the area. So if your home hasn't been renovated since the late 90s, but was valued based upon your neighboring homes where they'd been recently gutted and updated and remodeled, then you might want to protest the value. Protesting your value is best done as soon as possible. Each county has a cutoff date to submit the protest. For Douglas County, that date is June 8th. And you can see it's right here on your card. It says your right to appeal the property valuation and or classification to the assessor expires June 8th. Your card might say a different date if you're located in a different county. So fill out the appeal provided with the notice. It's a little postcard on the back. And that can be submitted via snail mail with a stamp. You can also submit the appeal online or in person. You have to remember, the documentation you're using to support your appeal has to come from homes sold like yours in your neighborhood between July 1st of 2020 and June 30th of 2022. There are actually 2 numbers needed to figure out how much the actual property taxes are going to be increased. That's the property tax rate and the mill levy. Tax rate should be noted on your card. Here in Douglas County was 6.77%. Mill levy might be a little harder to find, but it is listed on the Douglas County website. In fact, it's listed on every county's website. The Douglas County website, the mill levy is 98.42. Be aware that where you live within the county determines the taxing entities which create your mill levy. Here's a general idea of where your money goes. So I've put a link to the Douglas County website in the description box down below so you can get more information. Now that we have the tax rate and the mill levy, let's get to calculating the tax amount. So multiply the current actual value times the assessment rate to get the new assessed value, which is basically the amount you're going to be taxed on. For example, using $650,101 times 0.0677 equals $44,011.84. Then take that assessed value and multiply it times the mill levy, which is divided by 1,000. This is the new annual property taxes amount. For this example, $44,011.84 times 98.42 divided by 1,000 is $4,331.65. That's your new annual taxes. You can compare the new annual tax amount to your past tax amount. Past tax amounts can be found on past loan statements or searching your county tax assessor's website. For example, in the property I'm using here, the amount last year was $2,972. Subtract the past property taxes from the new taxes and then divide by 12. will give you the total monthly amount the homeowner's tax bill just changed by. So $4,331.65 minus $2,972 divided by 12 gives us an increase of $113.30 every month. Now what? For this homeowner, $113 per month might not be enough to dispute it, or it might be considered appropriate given the rise in values. Or you might be over 65 and have been in your home for over 10 years as your primary residence, and so you have a senior exemption, which makes this number lower. But what if this is making the payment too high to afford? There's several options that a homeowner could explore. One is doing a cash-out refinance or obtain a home equity line of credit known as a HELOC to tap into the equity gain to pay the bill. Of course, the downside to this is with today's higher interest rates, there's a higher monthly payment. This solution would really make sense for the homeowner that also has high consumer debt at a high interest rate or wants to do some remodeling. If you're 62 and older, you might want to consider a reverse mortgage to eliminate the principal and interest portion of your mortgage payment, making the tax adjustment more attainable. And again, if you're 65 or older and have lived in the home at least 10 years, you can also apply for the state-funded property tax exemption. I put a link to the state of Colorado Department of Treasury website in the description box so you can check that out. And there's always one of my personal favorites. That's house hacking. You're creating ways to rent part of your home to make more income without having to find another job. Depending upon your zoning laws, you could rent out the garage, out a room, or finish the basement as a mother-in-law suite. Obviously, none of this is a solution that actually is a cure for higher taxes, but they might be able to help. In any case, feel free to reach out and connect with me. I'll be to help you gather data or discuss your options. If you find a solution that's right for you. My name's Peggy Dursthoff, and I'm a realtor at Live Denver Suburbs, powered by HomeSmart. Enjoyed this video? Check out this one over here that I did last week. Talk about Colorado property tax increase and what Governor Polis is planning on doing about it. So much for watching. See you on the next video.